Hey guys, Boris, Schlossberg, BKTraderFx, our weekly session for the 8th of March. We're going to start with the stupidest trade I think we've taken probably in the last 20 or 30 trades, which was the Aussie CAD trade. As you can see, we had this brilliant idea of going long Aussie, short CAD on the idea that RBA was going to raise rates and the Bank of Canada was going to lower rates. And this is a perfect example of being too clever by a half. First of all, rule number one when you're trading, never front run central bank announcements because you never know what happens. Quite a lot of times what typically happens is sell on the news. You buy the rumor, sell the news. It's exactly what happened with the RBA. There was no surprise. They raised by a quarter percentage. Everybody actually knew it. And what happened was the market sold off mainly because the RBA was a little bit more dovish in their statement afterwards. So we got caught in the trade. It was just a horrible trade. Got stopped out. The much more intelligent trade, and the one that we were really much more comfortable with, was the fact that BOC was going to cut. And in fact, the BOC not only cut, but they surprised to the downside. So the really smart trade, in this case, should have simply been dollar CAD. You can see, let me just pull this up for the same time frame. Give me just a second for this thing to come up. Yeah, here's dollar CAD, same time frame. Boom. That would have made you a tremendous amount of money. We were just trying to be a little too clever trying to trade the Aussie against the CAD in that case, when in fact the real trade was in the CAD. Now, moving on to the pound trade that happened. This was really interesting because this was a trade that I talked about in this week's weekly testimonial. Hang with me over here. This is it right here. Okay, we're long pound here around 98.49. And here's what happens, and I really want to emphasize this trade because it's a perfect example of learning the wrong lessons if you don't know what happened. We got long this trade on the assumption that the PMI service was going to be hot. In fact, we're absolutely correct in our event risk analysis and simply wrong in the timing. At this time, what happened was when London opened up, there was a tremendous amount of gilt redemption. Gilts are UK long-term bonds that were going to be redeemed Friday. This is a Wednesday trade. So there was a huge amount of sell stop orders on the open of London, and we got smashed, got broken down to the 9800 and all the way down to 9730. And then, as the news came out, and as generally the tone of the UK news became much more positive, the whole thing rallied. And as a matter of fact, if you look at it for the rest of the week, it just continued to rally, and is a 400-point gain. So what do you learn from this? You learn that, oh my God, you were so stupid to get stopped out 55 points when in fact the trade was going to go your way correctly? No, because if you didn't take the stop and you didn't have the data on your side, or for example, more importantly, the price action on your side, you had no idea where the stop was. Just to give you some samples, let me just go back. Hang with me here. I always love to show this example. This is EuroCAD. Hang with me. I'll show this to you. Over here, this is a daily on the EuroCAD. Suppose you traded without stops on this particular pair. Where would you have been out? 100 points, 200 points, 300 points? Where would you have closed out? You would have closed out your account when you were bankrupt. Making a mistake in timing on a bad trade is like getting a bad pebble bounce when you're trading, when you're playing third base in baseball. It's like getting a gust of wind when you're making a putt in golf. It happens in life. It's going to happen 1,000 times over. You just move on and go on to the next trade, which is what I want to bring your attention to now, because the next trade was exactly how you bounce back from these kind of setbacks. We're going to go back to dollar CAD, and this was a trade that we traded on. Here we go. Hang with me. We traded on Thursday night. We went into this because our analysis told us that the employment data for the CAD was going to be very hot. And all day long, dollar CAD, even though oil was at 105, dollar CAD was actually trading up, mainly based upon risk aversion flows. So we got short at 98.69, almost at a top tick. And for the whole night, the trade really went our way. More importantly, I took T1 right around here just before midnight, and then we stayed in the trade very carefully, and then as it approached, notice over here, as it approached the 7 o'clock hour right over here, I moved my stop to 98.49 to make sure that I was constantly trailing and making sure that I was going to be in the money even on the second lot of the position, but giving myself plenty of room in case we were absolutely right. In this case, we were absolutely right. The employment number was horrid. We took our profits right at our T2, made 142 points, bounced right back off the pound trade from the day before. But here's the other thing that I want to teach you. Take your profits when you can. Because as the day progressed, even though US data was absolutely horrid and you would think dollar CAD would continue to go down, it actually completely reversed and went all the way up. This is a perfect example how when being greedy in the currency market will kill you. If you try to press your trade and hold for more money, you actually wound up being actually break even or possibly losing if you didn't have any stops as it rallied all the way back up. Remember, it's a sentiment-based market. Sentiment changes on a dime. You take your profits when you can. This is Boris Schlossberg, BKT, over and out, wishing you the best. Next week, more trades.